The market sinks into our target as expected. Is it goodbye bully or buy bully? This is Invest with Jacob. Okay, guys, so in yesterday's video, we talked about the fact that as long as the bears could follow through 55.62, we would expect them to continue lower into that 54.75 area. And that's exactly what we saw as the market sold off sharply into our target. Now the question is it goodbye to the bulls or buy the bulls? I'll get into that in just 1 second. But first, if you're new here, welcome to the show, guys. My name is Jacob Gabbard, and this is Invest with Jacob, where we use Elliott Wave Theory to break down the SP500 and the NASDAQ. I highly encourage you to hit that subscribe button down below so that you can get our daily S&P updates, our trade setups, and our buy alerts. All right, guys, so we talked about our day trading successes yesterday and how for the whole first half of the year and really our whole time as a channel, I just wanted to show you a chunk in time. We are successful day traders today. Here's our last two swing trades. We sold yesterday for a nice profit. We also had a long in the middle for the B wave that was also very profitable and did very well on both of those trades. As you can see on the screen, our traders are loving it. We're doing amazing in these rooms, and we want you to be part of it. So if you are interested in joining a winning team, stay tuned for later in the video. But for now, let's jump into the charts and take a look. Okay, guys, so here we are on the 1 hour futures chart for the S&P 500. And yesterday we had a target of 54.75. They came down. They actually didn't. They bounced off of it. They tried to hold it, but they really didn't hold any support yesterday whatsoever. And they blew through 54.75 before bouncing a little bit after the close. The 54.75 level, somebody asked me where I came up with this number. It is the 0.5 retrace of the 1 and 2 up. I realized it is not the 1.0, which would be a more natural target. The reason I went with this one is it lines up with the SPX pivot. And that's an important place for the market to hold if we're going to see an impulsive move to the upside. Sometimes the futures have after-hours trading that's a little bit out of whack with the cash market. And so that 0.5 lined up really well with the pivot on SPX, and they tried to hold the pivot. It's a natural area for them to hold. There's good support here as well. And so that's where that number came from. The more natural target is 54.50, which they are just above. They came in just above that. This blue box here is a very strong support zone, and they did bounce it into the close just a little bit, kind of still a dead cat. They haven't really done anything spectacular yet as far as bounces go, but overall, we would still be looking for more downside here. And not a ton necessarily, but given the fact that the pivot broke on the SPX, so if you're looking at the April lows and you're looking at the April lows as a potential 1, 2, and then they hit the 1, 2, 3, 6, which you would expect perfectly here, come back and break the pivot, okay, then that's an indication that we're not going to get a standard impulsive move up, which usually means we're going to get down into wave 1 territory. Additionally, on top of that, okay, you have the 21 exponential moving average sitting right at this 53.60 or 53.85 area. It's also the 1382 extension of the move down, which is a very common C wave target. And there's a lot of chart support here as well. So this would be a very natural area for them to come back and test. And in this in more of a diagonal structure, which makes a lot of sense off of this low with an A, B, C for 1, and A, B, C for 2, A, B, C for 3, and then A, B, C for 4 that gets into wave 1 territory. And that ABC up toward that 58.32 area on the ES, potentially as high as the 59.27 area, but I would look for 58.32 overall. And that would be the bullish count and what we would be looking for should the bulls take it to the upside. Now, diagonals are rare, but this is an incomplete structure. I would still expect another high, and we didn't make new all-time highs here on what looks to be a three-wave move. So another high does make sense. So what we would look for here is our primary path would be potentially a little bit lower, but ultimately a wave 4 of C bounce. So right now you're still in at least 3 of C, if not 3 of C. And you would look for a wave 4 bounce back up towards that 5,500 area, and then down into that 5,400 to 5,385 area. Into the 21 exponential moving average on the weekly chart. And that's a huge area of support in general. That moving average very often holds. They can spike through it and still reverse, but in that area, we would look for the bulls to want to buy. And then the question will be, can they take it back over resistance once we do get a bounce, which will tell us if we're either headed higher or if a top is in and we're looking for a bigger pattern to the downside. So the move down yesterday did do a lot for the bears, but they still have a ton of work to do before you could ever say a top is in here. Right now, it's still a standard pullback toward the 20-week moving average, as well as the 1.0 through 1.382 for the C wave. into heavy support on the chart as well. So everything lining up, lots of confluence with the Elliott wave counts, with the fibs, with the moving averages, and with the overall bigger picture count. So right now, still leaning bullish, still leaning that they hold that 53.85 area and drive it higher up toward 58.31 in that area to complete, and then we'll see what we get from there. Over on the NASDAQ. Now, on the NASDAQ, we already are, so this blue line is the 21-week exponential moving average. They have already come back basically down to it. They basically touched it, just shot slightly short of it today. And you also have mega chart support here as well. So a bounce makes sense off of this area. And the NASDAQ has already hit its 21, and it's been leading in both directions. So it would not surprise me to see the NASDAQ hold here and start a bounce. And if we do start a bounce that's going to be bullish, it should be fairly strong and starting as early as tomorrow, or the week is still early. They can spike through this to allow the ES to come down to its 21 moving average, close the week above, or even start next week and rip it back above. You can see they did that down here. So they ripped it down to the 21, closed it below, and then immediately ripped it back above, back tested, and then they were off to the races. So this is a very common scenario where they come back, test something, spike it through, and then reverse it. We could definitely see that happen either intra-week or into next week as well. I would be looking for the NASDAQ to catch a bid or a bounce off of this area. They came down, we talked about that 19,100 area to 19,500 to 19,100 area. They've come into basically the bottom of that. For the Elliott wave count, you would want them to start bottoming in this area and turn up. Otherwise, we're going to have to count this as a bigger 1-2, and then we would be looking for a lot more downside. And of course, that would have to prove itself before I would buy into that just yet. So again, NASDAQ does have a good 5 down. We can see an ABC up. We'll drill in here. I just wanted to show you the 21-week moving average on the NASDAQ and where we're at in regards to that in our support box. Still a lot of work to do as well on the NASDAQ. On both charts, the April lows are really the place to break through to give us a very strong signal that the top is in, and we're going to have a much bigger correction than people anticipate. Until they break the April lows, we do still have bullish potentials ahead of us. If we drill into the hourly chart, as I said, you have a really clean 5 down. 1, 2, 3, 4, 5. You want this wave 5 to turn up here. It's starting to get a little bit long. So if they blow through this support tomorrow or toward the end of this week, then we will want to see significant extensions in effect that this would be a 1, 2 up, and we'd be starting a wave 3 down. And again, that would have to prove itself for me to buy into that exactly. But this 19,100 area is an area you want the market to turn up if you want this 5-wave count to stick, as it is getting a little bit long. So we would look for a 3-wave move up. We get an A, B, C like this. In order to start being somewhat bullish, they need to get back over this wave 4 area. And for them to be fully bullish, they will need to get back through 20,286. If they get through 20,286, that'd be a fairly strong sign that they're going to try to take this back up to the new all-time highs. So if the bulls are going to try to take it higher, again, that 20,072 is the first level to get through to signify that we're going to have a bigger bounce. And then you would want to see that 20,286 level break to give us a fairly strong indication that we are going to try to head back toward all-time highs here. One final note, this will be my last video of the week, as I do have to move this weekend and won't have time tomorrow after the market closes to get a video out. So this will be my last video of the week. If you want real-time updates, I will be in my trading room on both Thursday and Friday, but I will not be able to put out public videos for those days. And then I'm out Monday, so no video until next Wednesday. So again, you can join my room if you want updates on the market. Guys, if you love the information that I put out in these videos and you want real-time market updates from me, you need to check out investwithjacob.com. There's a link down in the description. Go ahead and click that link. It'll take you right over to the webpage. Once you're there, check out our membership plans area. We have 2 incredible plans, and they both come with a 7-day free trial because I want you to get in there. I want you to make sure you love it. I want you to become part of our trading team, interact with PT and I, and make sure it's for you before you ever spend a penny. You can cancel at any time. You literally have nothing to lose by checking us out. We also have our educational materials, our Elliott Wave Advanced course and our Elliott Wave for Beginners online course. These courses are helping people understand this complex market. In the advanced course, we go through more of the harder patterns to understand, the advanced fib levels, the diagonals, double and triple threes, flats, everything that makes it really difficult and challenging to find out where the market is heading. We break it down into bite-sized videos so that you can understand these complex markets. As you can see on the screen, traders are really loving these videos and they're helping them make money But I do understand that this could be more complex than you are used to, or you're just getting started in Elliott Wave. And that's why we have our Elliott Wave for Beginners online course. This course helps real traders make real money and finally understand the market in a way that makes sense. It can be very confusing when the market has good news and goes down and bad news and goes up. And that's because Elliott knew that the news cycles were garbage long ago. He knew that key levels mattered, the levels that we trade off of, and you've seen our success. These levels are important, and he knew what happened when they held and what happened when they broke. This gives you a huge trading advantage over the rest of the market. This course is 25 videos where we go through 3 parts. Your introduction, where we introduce you to Elliott Wave Theory, your mindset and emotion, the KISS method, and why this works. All very important videos. Chart setup and tools, so you have everything you need to use with Elliott Wave Theory, how we use all these tools and why we use these tools, as well as the Elliott Wave for Beginners online course. This course has all of the waves, how to measure them, how to find the key levels, the pivot, the corrective depth theory, the theory of alternation, everything you need to know to make sense of this irrational market. Now, the cool thing about these videos is if you want to get both of them at a discount, you can get our bundle pack. You get both of them at a $37 discount. But if you want to pay nothing at all, you simply become a member of our monthly rooms, as these videos or these training courses are included in our monthly rooms for free. In our first room, the Invest with Jacob room, you get all of our real-time market updates, all of our buy and sell alerts, all of your Elliott Wave questions answered, a midday video where I go through several different charts, answer all your questions, tell you where we are in the counts, what we're expecting for the rest of the day and the week. And you also get the training material you just saw. We trade the SPY and the QQQs, so we do trade quite often in my room with day and swing trades. Now, if you're looking for income trading, futures trading, individual stocks, or advanced training, you need to check out PT's Throne Room. In there, you get everything you get in the Invest with Jacob room, as well as individual stocks, futures trading, his income method. Guys, it's just killing the market. It crushes it. As well as his reduced risk binary method that gets you in at a cheap price and gets you huge multiples on your money. And it's how he structures those trades that make it work. It's something you kind of have to see to understand. And that's why we give you that 7-day free trial. He also started a challenge account where we put $4,000 into an account trading mini ES futures, showing you how to build a small account into a large retirement or savings account. Guys, we'd love to have you in these rooms so we can all make money together. All right, key takeaways for it today. I would like to see the ES push lower. 5450 was the natural 1.0. They're close to that. But just below that is the 20-week moving average in that 5385, maybe 5400 level by the time they get there. I would like to see a little bit of a bounce in 4 of C and then 5 of C down into that area before seeing the bulls take it back up toward all-time highs to complete this structure off the April lows. It's still only a 3-wave structure, so we would look for one more push up from there. If the bulls are going to hold here, they would need to push it back over 5511 would be the first level to break, and then we would look for them to push back through 5630 to tell us that they're on their way to all-time highs. Over on the NASDAQ, they are at their 21-week moving average. We would look for them to potentially spike lower here on a 4-5 with ES as well. We don't want them to go too much lower. We would like this wave 5 to hold, as it is getting a little bit long for a wave 5. And then we would look for a bounce after that. And back through the 20,286 area would signify that they're likely taking this back up to all-time highs. Guys, it's my weekend. I will not be having a video tomorrow, and I will not actually have one until next Wednesday because I am doing some moving, so I will be out on Monday. Have a wonderful weekend. Get away from the house and the computer. Do something fun with your family, and I will talk to you next week.